There's been a lot of discussions recently in regards to the property market and should people hold off buying. In this video, I'm going to explore the question, is now a good time to buy? Welcome to my channel. For first time viewers, my name is Fleming. I have a degree in property economics. I'm a chartered property surveyor. I've worked in the property industry for over 17 years. I've advised clients such as McDonald's, Circle K, private investors and developers, and I also provide acquisition and sales advice to private individuals. In some of my past videos, when I refer to the property market, I generally refer to both commercial and residential. However, in this video, I'm just referring to the residential market. I get influenced by what I read and what I study, but I always try to look beyond the details to look at the wider picture. I am dyslexic and I sometimes think I look at things differently. Last year, I took a course on urban economics and urban development from Harvard X. This course did cover off a little bit in regards to how cities bounce back from past viral outbreaks. Perhaps because of this course, I am slightly influenced in the fact that I believe cities will continue to grow and urban development is the way of the future. Or perhaps I'm influenced because I like living in cities. This year I started a real estate course from NYU, and perhaps this course and doing this course in NYU will have an influence on how I look at the real estate world going forward. I bring this up because buyers are being influenced by the likes of My Home, Daft, the Irish Times, all writing reports that saying that property prices are skyrocketing. This is compounded by the fact that agents are stating that houses are selling without people actually viewing them, and prices are being achieved far in excess of the asking price. This is further compounded by social media accounts who are sharing stories where prices have been achieved in excess of the asking price. All of this leads to buyers' fear and overbidding, and now we have economist David McWilliams asking for a buyer's strike and for people to rent instead. If you are thinking about stepping away from the market, I'd love to have your comments, put them below in terms of what's influenced you to step away from the market if you are considering stepping away from the market. Also, don't forget to give this video a thumbs up. It really helps with the YouTube gods. It is hard to know what to do right now, and different questions will come up for owner-occupiers versus investors. Realistically, you need to make a decision based on your own personal circumstances and what suits you best. While David McWilliams made a lot of good points, he also glossed over a lot of factors. First off, agents are not restricting viewings because of high demand, and they're not only allowing viewings once a deposit has been received and contracts issued for their benefit. It's a requirement by the state licensing authority, and agents have to follow this requirement. This is a fact that David McWilliams glossed over. Secondly, renting may not be as straightforward as David McWilliams made out. And it is strange for an economist to make the point that rents have fallen considerably a number of times in his latest podcast when actually the facts don't point to that. The latest stats from the rental price index from the PTB actually suggest that rents have increased by 1.4% nationwide. Granted, this index is a little bit out of date. However, when I hop over to IPI to have a look at what IPI is saying, it's suggesting that rental market has gone up by about 11% in Dublin over last month and 7% overall. Granted, I believe these figures are a little bit skewed based on the stock that's in the market at the moment. It is my view that rental levels have softened a little bit, but there's no evidence to support McWilliams' claim that rents have become far more affordable right now. Also, once the IT companies call people back to Dublin, there will be a shortage of available space again. And this is going to be compounded by the fact that more and more private landlords are actually leaving the market. Boycotting the market and renting for 2 years does not take into account that the rent you'd have to pay for those 2 years and also the 2 years lost of paying down your mortgage. Let's say you're a family, you're renting for 2 years, you're renting on an annual rent of $25,000 per year. That's $50,000 that you would have paid in rent. Let's just assume right now you buy a house for $500,000. The property would have to fall as much as 10% for it to make this, for you to lose as much as you paid in rent. It's not as straightforward as that, but you know what I'm talking about. Mortgages are also granted on your age. So let's just assume you take 2 more years out before you could get your mortgage. That could have an impact on how much you can borrow. or in the term you could borrow on. Let's assume you can borrow right now and you can borrow at a 30-year mortgage term. You take 2 years out of the market, perhaps you may only, based on your age, perhaps you may only be able to borrow for 28-year term when it comes to buying into 2 years time. There's a lot of personal things that need to be factored in when taking out a mortgage, or perhaps taking a 2-year break before you actually apply for a mortgage. So an all-out strike may not apply or may not appeal to a lot of people. Also, if everyone was to strike for 2 years, there'd be twice as many people looking to buy a house in 2 years' time. The 2008 crash was far different than what we're facing right now. Granted, the outlook is a bit worrying, but finances are still available. In 2008, no one could get any finances, and there was a lot of people who were far overextended in terms of their property loans and personal loans. The same cannot be said at the moment. Interest rates are at an all-time low. Banks are still willing to lend. Some people have lost their jobs, and perhaps more people will lose their jobs. The road to recovery may not be that easy, but there is a lot of people who have a huge amount of personal savings, and there's a huge appetite to buy right now. The market is a bit crazy at the moment, and cooler heads are needed. David McWilliams is right in this point. Buyers do need to cool off a little bit and stop with the crazy bids, and perhaps once supply returns in the next few months, perhaps that will happen. Even though prices are crazy at the moment, prices are still significantly below where they were in 2018 and 2019. So while there is lots of reports suggesting that prices are out of control, they still are lower than where they were in 2018 and 2019. Given the current economic outlook, that's not surprising. We are in the middle of a global pandemic, and the outlook should be a little bit less than it was in 2018 and 2019. Realistically, a lot of properties are overpriced and there is no value to be found. I've said it before and I'll say it again, I'm not a huge fan of using averages to value property. So I had a look at some properties that I sold in the end of 2018 and to early 2019. These properties ranged from areas from Dublin 18 to Dublin 6 and to Dublin 8. And while I looked at those properties, the prices I achieved at the end of 2018 were still far higher than what is being currently achieved for similar properties on similar streets right now. I'm not sure what economic factors McWilliams is relying on in terms of a massive downturn in property prices. Unemployment is at a record high, so taking that factor into account, fair enough, that is definitely an indicator for lower property values. However, Ireland had a GDP, a positive GDP of 3.4% in 2020. This was against an expected GDP of minus 10%. And a lot of that has to do with thanks of huge government spending, exports from pharma and tech companies here in Ireland. But when you compare Ireland's positive GDP of 3.4% to somewhere like Spain, which had a negative GDP of 11% in 2020, you really start to understand how well Ireland performed in 2020 and also how reliant Ireland is on big tech and pharma companies. Interest rates are at an all-time low. Access to capital is far easier than it was in 2008. Inflation is running low. All of these factors would point to positive property price growth in the future. While I still think the effects of COVID is yet to be fully felt within the Irish economy, I do not believe we're going to see the same price corrections that we saw following the 2008 crash. In 2008, many people fell into negative equity quickly and were forced to sell. That hasn't really been happening so far in 2020. And actually what has happened is properties that are in mortgage arrears has actually fallen in 2020. That could change once government supports run out. I think this is a very important factor to consider. Ireland is not alone in increase in property prices in 2020. Low interest rates, government stimulus, coupled with low supply levels across the globe has led to a global increase in property prices In 2020, it was approximately 4.7%. That trend doesn't seem to be going anywhere, and I'm very surprised someone like David McWilliams hasn't noted that in any of his discussions, that Ireland isn't alone in this. Looking at Ireland from a global investment point of view, Ireland is still a very attractive place to invest. Global investors are still very keen to invest in Irish real estate. The same cannot be said in terms of 2008. Foreign investment was next to none from about 2005, maybe even further back, up to about 2012. That is because most foreign investors saw that the crash was coming or there was a property bubble, and they exited the market well before it ever happened. That's not happening right now. Foreign investment is still very keen to get into Irish real estate. One also has to think about where supply is coming from. There was approximately 20,000 new homes delivered in 2020 in Ireland. The state took about 7,000 of them. Let's say another 7,000 of them went to build to rent. That only roughly leaves about 6,000 left for the open market. The council definitely took a few of them on long-term leases, and the council actually leased nearly 18,000 units last year in 2020, and about 15,000 of those properties were let via HAP. That's not leaving a huge amount of houses out there for the general public, and I don't imagine the situation will improve too much in 2021. While I believe the market should become a little bit more stable once more people have the vaccine and there's less fear in regards to viewing properties, more properties should come on the market. At this point, there might be a slight downward trend in prices. However, it will not be anywhere near 2008 levels. If you have decided to exit the buyer's market, I would say well done. It's time for cooler heads. I myself have advised some acquisition clients to remove themselves from some heated bidding situations. I've also told them to be more patient in regards to the market, and this process could take at least a year before there is reasonable supply on the market. However, I think it's important to add everything up as well. If you're buying from an owner-occupier point of view, and you're leaving the market for 2 years, you have to consider the rent you will pay during those 2 years. On the investment side, are you better looking at rent coming in now or your money sitting in the bank versus any possible price drop? Assuming no major economic shift in the landscape, I do not expect any dramatic fall in residential price values from 20, 30 or 50%. I do not expect this to happen. If there is a property that you really want to purchase that suits your long-term needs right now, my suggestion is don't hesitate in buying it. But know your value and know what your maximum bid is before you place your very first bid. Before you all jump on saying another agent suggesting you buy. I have a lot of acquisition clients that I've told to cool their jets and be patient. Personally, I don't believe there's any value in the market right now, but I think in terms of buying, it's a personal decision you need to make and make sure it makes sense for you. I am hopeful supply will return over the next 9 months, and I'm hopeful that there will be more deals to be had over the next 9 months or so. If you've liked this video, please give it a thumbs up and don't forget to subscribe to the channel, and as always, thanks for watching.